Hi everyone, thanks for joining. My name is Felix Fry and I am the founder and creator of OptionsGeek.com. I've spent the last few years developing OptionsGeek.com in an attempt to revolutionize options education, specifically to make it simple for everyone to understand. You see, I'm on a mission. Over the next 5 years, I want to reach 1 million people and let them hear my message, the truth about options. So, in the next hour, I'm going to show you exactly how easy options can be and how the top 1% of investors make money using them without the Greeks or implied volatility that everyone likes to talk about. And don't forget, if you stick around, I'm going to make you an incredible offer. I'll give you a secret link where you can gain access to everything I'm about to show you. But you have to be watching live in order to get this. So stick around. I promise it will be worth your time. Now, I know that there are distractions everywhere, but what I'm about to share with you are truly the option secrets known only to the top 1% of investors around the world. Knowing these secrets can change your life, and I don't want you to miss not a single moment. So please, make the commitment to stay focused. Can you do that for yourself? Close out Facebook, shut down your email, turn off your cell phone. It's that important you stay focused. Now you might be wondering, how do I know the option secret known only to the top 1%? So before we begin, let me briefly tell you more about myself and a little about OptionsGeek.com. I graduated the Wharton School at the University of Pennsylvania in 1995, then took my first job in Chicago at a top investment bank, Swiss Bank O'Connor. Swiss Bank bought O'Connor in 1992. Why? Well, O'Connor was known for two things. One, making money with options, and two, offering the best options training program on Wall Street. Most of the options education that exists today started with this program. A few years later, I was recruited by another top investment bank, Bank of America. It was here where my career took off. I instantly found myself talking to the top 1% of investors on a daily basis. Advising and trading against them was an incredible experience. But years later, I got the call to join one of the top hedge funds in the world, Skagen Capital Management, and sit next to two of the best investors over the last 30 years. It was in that seat that my eyes were opened, where I learned that options could be thought about in a different way. Instead of focusing on the Greeks and implied volatility, we can use options to focus on leverage, risk-reward, and probabilities. Reflecting on the options industry and my unique path through it, I found something incredible. The answers I'd been looking for throughout my career. This led me to create OptionsGeek.com. Now, OptionsGeek.com is changing people's lives, not just in how they think about investing, but in connecting education to profits in a much easier way. Listen to Blessing. On JD, I was in New York City last week for spring break with my kid and intentionally did no trading for a week for some quality time with her. Came back and still made money. A 200% return. Had some peace of mind following the plan laid out. It was super nice to have that level of confidence and not sitting in front of my PC. Many thanks. Or Nick. That APC call was right on. Can't believe they got taken over. In all the years I've been trading, I don't remember catching a takeover trade like that. Had 25 of those calls at $1.25, sold them out for an average of about $12.50. Almost $30,000. Need a lot of trades like that. Getting ready to break ground in a house I'm building in Cape May. You definitely have a keen eye for the right place. How about Lem? Over $7,000 profit on a $1,200 investment in 1 week. I know they all won't be like that, but I am confident that with patience in waiting for the right setup, systematically averaging in and out, and smart management of the losers, I can start to build some momentum. I don't want to be overly dramatic, as this is only money, but you have given me more financial hope than I've had in some time. Thanks so much. Imagine what your life could be like after applying these option secrets used by the top 1%. Thinking positive, having more time with your family. Can you see how others are not just thanking me? Their mindset is changed forever. Wouldn't that make things better for you? Options Geek is my way to change the game for the average investor. It is a translation of my 20 plus year career on Wall Street that identifies, defines, and teaches the average investor how to gain edge using options, just like the top 1% of investors in the world. I've broken down the site into 3 parts. 1, you get hours of the best options education on the market with over 50 professionally done videos, transcripts, Q&A, live seminars, live interviews, and much more. There is nothing on the market like it. People love it because they actually learn. They get excited because they actually understand. I've created new concepts and take my skill of breaking down the complex to make options simple. But with any education, you need to learn how to apply it, how to make money with it. So to make options education practical, I created a simple tool that gives you the answers you need to trade like the top 1%. I'm incredibly excited to show you what I've done and to show you how simple this could be. This tool is a game changer. Now, you can stop there and this would be an incredible educational experience. But I wanted to go further. The hardest part about trading options is finding the right ideas. That's why I wanted to show you exactly what the top 1% are trading week after week. The trading ideas that are making them consistent 150 to 400% returns. So for the last part, I put together 3 to 5 option picks each week. The results have been outstanding. Here's a snapshot of the first 140 trades given to the Options Geek community over the last 7 months. 89 of 140 trades reached more than 100% returns. That's 63.5% of the trade ideas. Now I'm getting ahead of myself. We'll get back to those options trades that are making consistent triple-digit returns later on. And I'll show you specifically where you can get them in just a moment. It's part of that special, incredible offer that I promised you earlier. But first, I need to get everyone caught up to speed. So now, I'm excited to give you the lesson of a lifetime. What they don't teach you in any options book. What they don't teach you in any options class. This is options without the Greeks or without implied volatility. This is options like you've never seen before. So how am I going to do this? First, I'm going to explain to you where the top 1% find edge using options. Then, I'm going to tell you exactly how they think about options. I'll show you how they trade them, what they do, and more importantly, what they don't do. The strategies they use and the strategies they don't use. This should be surprising to you. By the end, you'll get a clear understanding of what they're looking for. You'll be able to answer the 2 questions that 99% of investors do not know how to answer. The first question is, when do I use options? And the second is, which option do I use? The top 1% are very clear with their answers, and you will learn them today. I'll then show you how this simple yet powerful tool I developed will give you those answers immediately. After that, we'll move on to the trading ideas that are making consistent triple-digit returns. I'll show you how the ideas are formed, what they entail, and how to get involved. These are the ideas that are making the Options Geek community a lot of money. Let's begin. For purposes of this presentation, we'll focus on a specific group of the top 1%. These are the top hedge fund managers in the world who profit from the directional move of the stock. Managers like Steve Cohen, Carl Icahn, David Einhorn, Bill Ackman, Dan Loeb, and Paul Singer, just to name a few. So first, we'll outline where the top 1% gain their edge. There are 4 areas where the top 1% have edge. Clearly, they have edge in how they get their ideas. The top 1% have the resources, the money, and the time to find and analyze the best ideas. But once they find their idea, they need to decide whether or not to use stock or options. Knowing that answer, specifically when to use options, is edge. And once they decide to use options, knowing how to choose the right strategy and pick the right option is also edge. Finally, the top 1% find edge in their plan. They have a well thought out trading plan that addresses position sizing, entering trades, exiting trades, and minimizing risk. Let's focus here. When they trade, the top 1% focuses intently on risk reward. Now, we all understand the basics. The greater the risk, the greater the reward we should expect to inherit that risk. Easy enough. Well, the top 1% only use options when the risk reward of using options is better than the risk reward of using stock, and only if the odds are in their favor. Conceptually, I know that's also easy to understand, but the question becomes, how do you know that? To understand that, let's talk a little bit about options. Options are about leverage. Leverage is the ability to turn $1 into $3, $4, $5, or $10, or even more. The top 1% use options to gain leverage on their stock idea, and they're looking for maximum leverage. This leads us to the next question. How do they find that? Or how much leverage is enough? So let's discuss this for a second. Managing leverage in options takes a basic understanding of probabilities, and you're likely comfortable with probabilities if you've played poker, backgammon, or even heads or tails. Now, we won't have to go back to 10th grade statistics class to understand probabilities and options. We just need a very basic visual understanding. Let's think of a stock, and then let's think of an at-the-money call option. This means a strike price that is the same as the stock price. Let's ask ourselves, what is the approximate probability that the stock ends above the call strike price at expiration? Above the call strike is called in the money. Take 5 seconds. The answer is approximately 50%. There is approximately 50% chance that the stock ends above the strike price, and thus 50% the stock ends below the strike price. We call that out of the money. Now, let's move the call option strike higher. This is called an out of the money call option. Is the probability of ending above this call strike greater than or less than the last call strike? Well, because the strike is much higher, which further means that the stock has to move a lot, the probability is much less. Let's assume that the probability is 10%, which means it has a 90% chance of not being above the strike price. Now, with a smaller chance to end above this strike, which would cost more? This option or this option? The answer is this option, because it has a greater probability of being above the strike. Now, here is where a lot of people get confused. When we are trading or investing, naturally, we want to buy something cheap and sell it at a more expensive price, right? Well, in options, just because this option costs more than this option doesn't mean that this option is cheaper than this option. It costs less, but it doesn't make it cheaper. Cheap is being used in a different context, making it sound like it is better value. That is not necessarily true in options. In options, cheap has to include the relationship between the probabilities and the cost of the option. This is very important. So, to put into context, let's assume this call option costs $4 and this call option costs $1. If we're looking to buy one call option, then we can't make our decision between these two options based on price. The $1 call is not cheaper than the $4 call. Yes, it costs less, but it may not be the cheaper option. It's really important that you don't fall into this trap. We'll talk more about how to determine cheap and expensive in a few minutes. Now, here's another thing to note. If you have $4 to spend, then you can buy one of these call options, or you can buy 4 of these call options. This should help you realize how this option can have much greater leverage if the stock makes a significant move. But again, the probability of that large of a move in the stock price is much lower. So now let's point something else out. The top 1% want to maximize their leverage. This leads them to buy options. More specifically, they buy out of the money options. There are many people who recommend in the money options and some who recommend buying at the money options. Let's put that to rest right now. I'll repeat. The top 1% wants to maximize their leverage. This leads them to buy out of the money options. But as we just pointed out, the probability of actually gaining that leverage declines the further away the strike is from the stock's current position. For example, you get a lot of leverage here, but the probability of getting above here is almost 0%. The top 1% are not buying these options with very little chance of the stock getting there. They pick the out of the money option they want by finding the right balance, the balance between the amount of leverage they receive and the probability of getting beyond the strike. Now, I'll make it easier. The top 1% buy options within a certain range of these out of the money options. That range is between the 25 and 45% probability of being in the money option. Why is that? I explain it further in my education, but for now, let's just go with that range. So while this narrows the range, it still leaves us asking which one to choose, and more specifically, how does the top 1% do it? Before giving you that answer, let me give you some more information about the top 1%. This is very important. The top 1% keep it simple. The strategy they use is either buying puts or buying calls. They don't like call spreads or put spreads. They don't like selling these higher leverage, lower probability options because they know at some point the option they own will explode higher. And so they don't want to cap their profits. They try to avoid giving others the leverage they want. If I had to break it down into percentages, I would say more than 90% of the time they are simply buying puts or buying calls. 9% of the time they will trade a spread, and 1% of the time some other strategy. In 20 plus years of trading with the top 1%, I have never traded or seen them trade an iron condor. Not once. So let's also just put that myth to rest right now. Now, back to the question that 99% of investors don't know how to answer. How do you choose the right option? This options question has stumped even the smartest investors. But let's simplify it here and start with something else. By now you can see that options are essentially a probability game. And the only way to play a probability game is to understand a concept called mathematical edge. Now, whether you've heard this concept or not, I'm sure you understand how it works and have actually used it. Let's look at a game of heads or tails. If I told you we would play a game of heads or tails where you would call it, and if you were right, you would win $1, but if you lost, you would lose $2, then you and most people would say that this isn't a game you want to play. Why is that? Because you know that in this game, the odds are against you. You know that you would lose this game over time. And if we switch the payout where you would win $2 and lose only $1, then that's a game you would play. Easy enough. Deciding whether or not you play heads or tails uses the concept mathematical edge. Again, every probability game uses this concept. So, since options are a probability game, we can use the simple concept of mathematical edge to help us decide how to choose the right option. Now, I won't go through the simple math right now because I lay it all out in my education, which I'll give you access to in a few minutes. Instead, I created a tool that does all the quick math for you, all the iterations in a split second to give you exactly what you're looking for. So, let's take a look. What I'm about to show you is a simple tool that takes all the guesswork out of options. That means no Greeks and no implied volatility analysis. A simple tool that answers the two option questions everyone has. When should I use options? And then, which option should I buy? These are the two questions that the top 1% in the world know the answers to. As I showed you earlier, this is their options edge. Remember, the top 1% buy options when the odds are in their favor. This tool that I've created shows you how to play the odds and helps you determine when the leverage offered to you by the market is a better trade than simply trading the stock. So, let's start by recapping how the top 1% think about buying options. Here are 6 points we just discussed that will shape the way you should think about options. Again, the education I've created helps clarify the details if you're interested. Number 1, the top 1% only use options when the risk reward of using options is better than the risk reward of using stock, and only if the odds are in your favor. Number 2, options are about leverage, and the top 1% want to maximize their leverage when using options. This leads them to buy out of the money options. Number 3, the option isn't cheap just because it costs less. The top 1% rarely buy anything less than 25% probability of being in the money options. These are way out of the money options. Number 4, the top 1% buy options within a certain range of these out of the money options. That range is between the 25 and 45% probability of being in the money option. Number 5, the top 1% keep it simple with their strategies. They are either buying puts or buying calls. I would say they do this 90% of the time. Number 6, the top 1% use a 300-year-old concept called mathematical edge, which helps them better evaluate the risk reward of an option. This allows them to choose the right option. While this is how they think, now I'll show you how to translate it and use it in practice. I built this tool to simplify that process. It makes options accessible to every investor in the world, but not just accessible. It offers you a way to use options like the best in the world. I call it the new options chain. It gives you the information that no one else provides. Let's start by walking through this a bit, and then we'll go through a few examples. The new options chain is similar to every other options chain in a few ways. The stock ticker and price is here. I'm using Apple. You have your calls on the left and puts are on the right. Strikes are down the middle, and your expiration dates are here. I give you the bid ask, volume, and open interest. Now, what's different? Well, first we have these two columns in yellow. I labeled it $, which is the risk-reward break-even price. These numbers are the risk-reward break-even price at expiration that balance the risk-reward of that particular option. These are new calculated numbers that you have never seen before. They are the numbers that come from the simple formula representing mathematical edge, which I told you about earlier. The details are in the education. It's this number that revolutionizes the options game. When we buy call options, we want our target stock price above these prices. When we buy put options, we want our target stock price below these prices. That would shift the odds in our favor. It's how we find mathematical edge. Next, I have a shade button here. When I press this button, I shade the areas where there is no need to look. Why is that? Well, remember, we are trying to trade like the top 1%. They buy out of the money options for the leverage, and they buy them within a certain range, 25 to 45% probability of being in the money. You can click this I button and see it there. So these two windows, if you will, on the call side and on the put side, is where we are looking for mathematical edge. Remember the first picture I showed you where we defined the 4 areas that the top 1% have edge. Number 1 was the idea. As part of the idea, we will need 3 things. 1, the target stock price. 2, the time it will take to get there. And 3, your confidence level on the success of hitting your target within the time frame. We understand 1 and 2. Most people ask a question on number 3. Let me explain with a story. While sitting at the hedge fund next to the 2 managers, analysts would walk into the room with their findings. They would pitch their stocks as the hedge fund managers listened. At the end, the hedge fund manager would always ask, on a scale of 1 to 10, 10 being certain, how confident are you? Ideas below 5 aren't even brought to their attention. They want to hear ideas where you are confident. For example, are you so confident that you'll risk your whole career on that one trade? Well, 10 is certainty, and no one should be a 10, ever. But depending on your confidence, the hedge fund manager decides how to proceed. Options trades are reserved for the 8s and 9s. So those 3 things, the target stock price, the timing, and your confidence, are what make your idea unique to you. These are your expectations, and I created this area up here for you to play around with them. This is where you tell the options chain what you think the target stock price is and what your confidence level is on that idea. Instead of 1 to 10, I use 0 to 100%. Here is the element of time. It contains the expiration dates specific to the option. You can change that as you wish. Again, combined together, these 3 things are unique to you. Keep in mind, the prices you see on the options chain are market prices, and they contain the market's expectations, which I translated for you into the RR dollar. Opportunity in investing only arises when your expectations differ from the market's expectations. This tool makes it easier for you to see when that happens. Let's take a look. Once you enter your expectations, a pointer will appear. The pointer indicates the option that has the best risk-reward given your expectations. How does it do that? Let's just quickly go back to heads or tails. You know how to play that game. It's a 50% probability game, so the payout has to be $1 win versus $1 loss, right? If the payout was $2 for winning versus $1 when you lose, then we know that there is opportunity, that the risk reward is in our favor. That's easy. But what if you play a game that only has a 25% probability of winning? Then what should the payout be if you lose $1 when you lose? How about if there was a 37% chance of winning? Not as easy anymore to do in your head, right? I'll show you the calculations in the education. You'll see that it isn't that hard. In each case, you can find the payouts where the risk reward is in your favor. What I've built here is a machine that does all the calculations for each option to show where the risk reward is imbalanced in your favor, and then neatly uses a confidence bar to determine the exact one. But just because the pointer appears doesn't mean you're to buy that option. You are only to buy the option if the pointer lands within the window. Here, I chose a target stock price of $198 and a confidence level of 80%. The pointer landed here. Because it isn't within the window where the top 1% are looking for opportunity, then buying stock instead of call options would be a better play using risk-reward analysis. Will I make money with that option? Yes, but again, it isn't enough. Remember, we want to find a stock idea where the pointer lands within the window. That's where the risk-reward will be on our side, along with the leverage we want. Now, I've created pop-up warning signs to guide you and help you think about what is happening as well, and how you would get the idea toward this window. For example, here, the window is telling you to try a higher target stock price or increase your confidence. Here, the warning is telling you that your target stock price is very aggressive and that you should simply double check that. It's that simple. Put in your expectations and the software does all the calculations of risk reward and finds the options that gives you the best balance. This gives you the answers to when you should use options and Which option should you choose? I'll let you play with that a little. I think within 15 minutes you'll be a lot more comfortable with how to think about options. That's all it takes for beginners. There are more details if you want to know the calculations in my education, but I'll leave that to you and at the pace you want it. Using the tool, there are two things that you'll realize after 15 minutes. One, it's not easy to get the pointer within the window. And this is why hedge fund managers are not using options on every trade. This is why they're reserving their options trades only for times where they can maximize their leverage. You should too. In fact, this tool will now make you pause and think about what you're doing and whether or not you have the odds in your favor. The second thing you'll realize is the idea takes on great importance, and naturally so. Options are simply a tool that offers leverage on your idea. There is edge in understanding how to use options, but that edge works only as good as your ability to find the right ideas. And finding good ideas takes time to learn and understand what you're looking for. So that's why I decided to create the idea portion of OptionsGeek.com to help you better understand how and where to find good risk-reward opportunities where you can make money. Let me show you what I deliver. I send 3 to 5 trade ideas every week via email or my Telegram room. Each idea is simple. It's either buying a put or buying a call. I try to balance the portfolio of trades between both. The time frame for these trades is generally between 1 month and 4 months. The ideas begin with unusual options activity, but each trade comes with my thought process that contain options analysis, technical analysis, and fundamental analysis wrapped into a short story outlining the trade. It also contains the exact option you will buy and the price you should pay. You get a target area for the stock price as well. 3 to 5 of these types of trades per week. People like to think that anyone can find good trade ideas by searching unusual options volume. I like to tell them this. Did you know that there is an estimated $60 billion of gold, silver, coins, and artifacts at the bottom of the ocean? Knowing that there are riches at the bottom of the ocean doesn't help you. The trick is to know exactly where to look. There can be dozens of unusual options volume trades each day. Most of them don't work. The idea is to find them, analyze them, and then pick one that does. So I showed you a couple of winning trades, but not all trades are winners. Of course, I have losers. Yet, here's where most people get confused. Investors often judge success with options the wrong way. Let me give you a couple of examples. If you buy an option for $1 and it goes to $5, then goes to 0 at expiration, was that a good trade or a bad trade? If you look at where it expired, it will look like a bad trade. If you look at where it went, it will look like a remarkable trade. In options, what counts is how high it goes. We know it can only go to 0. When buying options, it's how high the option goes that allows you to take profits along the way. How about this one? If someone wins 80% of the time and someone else wins 50% of the time, then who is more profitable? You can't tell. In order to get an answer, you need to know the win and loss percentage along with the amount you actually win and lose. The win rate percentage by itself doesn't matter. These metrics are important in options trading. They become part of your risk management techniques to manage the trades. What does that mean? It's your options plan. Remember, the options plan is the last place where the top 1% has edge. The options plan dictates things like size, entries, and exits. Now, my service tells you when to get in. It doesn't tell you when to exit. Why is that? Well, that's simple. Everyone is different. Exits are part of your options plan, and everyone's options plan is unique to them. Having a one-size-fits-all options plan for everyone doesn't work. The reason it doesn't work is because some people are more conservative or more aggressive than others. Some people like to let winners run much longer than other people. Part of what I teach is to take profits at different markers. Now, here's what I was excited to show you earlier. Here is a chart of the first 140 trade ideas I've given the Options Geek community. We are looking at the highest return of the idea during the life of the contract. 89 of the 140 trades have reached 100% returns. That's 63.5% of the trades. The highest return was almost 3,300%. The average high return was 255%. The average high return, if we took out the top and bottom 5 ideas, was 206%. The median was 135%. Here are some of the big winners. Now, some winners happened within days, but this service is not trying to be a fast get in quick, get out quick service. Again, the goal is about finding great risk reward opportunities and following a plan to extract the profits. Each week, I send a weekly update to give you all the trades to date. And in a second, I'm going to show you how to receive my next options trading idea. But before giving you my incredible offer, let me remind you what you learned today. Today, you've learned the answer for the 2 questions that 99% of investors don't know how to answer with any confidence. When to use options instead of stock, and which option to choose. In the process, you also learned how the top hedge fund managers buy options. Specifically, the 6 things they think about when trying to find the best risk-reward opportunities. Then I showed you an easy-to-understand tool that finally simplifies options and gives you the answers you need to feel confident that the odds are in your favor. Lastly, I showed you how the Options Geek community is making money. A lot of money, with easy-to-understand trading ideas and an options plan, which I'll show you how to make in my education. Now, it's time for the incredible offer. I'm giving you full access to OptionsGeek.com. This includes the best options education on the market. Over 50 plus professionally done videos, including live seminars, Q&A, interviews, and full transcripts. My education highlights new concepts and a new formula that for the first time makes options easy to understand so that everyone can use them. Listen to what others are saying. The information you have given is so demystifying. I have learned so much. You did such a great job teaching from theory to practice. By far, the best and easiest way to understand options. I'm following your options course. It's very good. Best explanation I've seen so far. Thanks for putting this together. Your online tutorials about options are great. They're incisive, clear, and very thorough, and far better than other options courses I've taken. You have never heard anything like this before. I guarantee it. Next, you will get unlimited access to the new options chain, which means that you're first going to get the best options education on the market, and then I'll translate that education into practice by giving you the tool which does all the work. This new options chain is smart, dynamic, easy to use, and giving investors everything they need to know in a simple way that takes all the guesswork out of using options. In fact, it's important to understand that with options, guessing leads to guaranteed losses. You don't want to be like any one of the millions of investors that are guessing. They don't know how to answer these 2 questions. And because of that, they will lose. It's guaranteed. They are playing the options game the wrong way. They are playing heads or tails, winning $1 and losing $2. With this tool, I've shown you how to reverse that, how to change the odds and shift them in your favor. No more Greeks, no more implied volatility analysis, just the answers, only known by the top 1% in the world. Then, to top it all off, I will give you high probability, institutional quality options trading ideas for you to profit from. So again, you'll receive a complete education, the best options education on the market with new concepts delivered in an easy to understand way that everyone can understand without the Greeks and without implied volatility, allowing you to learn options just like the top 1% know them. You'll also receive the incomparable new options chain that is the only tool on the market which gives you the answers known only to the top 1% and finally shifts the odds in your favor. And finally, 3 to 5 high probability options trades that have been making consistent, triple-digit returns. These are trades being done by the biggest hedge funds in the world. I've shown you the results. They will be delivered right to your inbox or through my private Telegram page for you to take action. You've heard what others have to say. You don't want to miss this. I am offering my next big trade in the next 24 hours. Now let me give you some insight. Education, good education, is not cheap. I charge $5,000 per day to teach on Wall Street. There are option gurus out there charging up to $15,000 to $30,000. Let me tell you something. It's all the same education, rehashed over and over again. This education, my education, is much more than that. It's new, exciting, and you get a front row seat. That's just the education. Great trading tools are invaluable. The new options chain is invaluable because it's simple and gives you the answers you need. Remember, if you're guessing when using options, then you will lose. It's guaranteed. The odds are against you. You want to change that. You want to trade with the odds in your favor. This tool does that for you. Now, the trading ideas. You can't put a price tag on that. A good institutional derivative advisor on Wall Street makes more than $500,000 per year. Hedge fund clients pay tens of thousands of dollars to talk to someone who knows what they're doing. My trading ideas have been making the community money, a lot of money. How can you put a price on that? But here's the great news. I'm not going to charge you $5,000. In fact, I'm not even going to charge you to try it. I am offering all of this to you for free for 2 weeks to try it out and get started on the right path of making money. I want you on board. I want you to see how easy options can be. I have revolutionized options education and I am on a mission. As I told you earlier, over the next 5 years, I want to reach 1 million investors and help reduce the gap between the top 1% and everyone else. I can't do it without you, and I can't do it if you don't win. Join me right now and press the button below. I am excited to have you on board. Thank you.